Is an investment in Alibaba stock just dead money? Or is this Alibaba really going to rise to the level it should rise in stock price? Alibaba is basically Amazon in China. China is a huge economy. So just the potential of Alibaba is massive. But if you look at the stock, it just doesn't perform very well. I'm going to analyze the company and try to answer that question, which is it dead money to invest in Alibaba, or is it worth buying some shares and seeing that investment rise in value? My name is Victor. I evaluate companies that I either invest in or consider investing in, and then I share that analysis on YouTube. In this video, I'm going to go through my process of investing in Alibaba, go through their financials, look at where I value the company, and then make a decision whether I'm going to buy additional shares of Alibaba, I'm going to hold the shares that I currently own, or I'm going to sell the shares that I own in Alibaba. Do me a favor and like my video and subscribe to my channel. I'd appreciate that. Now let's talk about Alibaba. The Alibaba business really resembles Amazon in just about every way. They have a huge e-commerce business, which really sells a lot in Asia, specifically China, but they also do a lot of business in Europe. They also have the cloud business, which resembles AWS. So a lot of similarities to Amazon. They're very profitable and generate free cash. The one headwind, or I would say the big discount, is that they're located in China, and China is a communist government. So I think that has a weight on top of the stock price. Alibaba is heavily discounted. I believe it's discounted by 88%. I mean, that's a big discount. Basically, I think if you really did weigh their free cash flows and discount those free cash flows to today's value, and also took the earnings per share, the value of the share should be around $164 per share, but they're currently trading at $87. So it's a very, very big discount. Again, they are located in China, which is a positive and a negative. The positive is that China, that's a huge economy. And I have few options that I really want to invest in where I get to diversify internationally into China. And this is one of the stocks that I own, not a big position, but I get to diversify into China. So that's a big positive. The negative being that, it is a foreign company, and any foreign company that I own, there's just added risk. So that those are the positive and the negative of them not being located in the United States. But really their cash flows are just excellent. You can follow this on, you can take a look at the cash flows as they grow over the next 4 years. Their terminal value is massive because, I mean, this company just generates a lot of revenue, a lot of free cash. All those cash flows discounted by 11%, a large weighted average cost of capital. They're valued at like $377 billion. They have lots of cash on the balance sheet, so they have a really healthy balance sheet. They have very little debt. So overall, their equity value is $441 billion, but their market cap's only $217 billion. So using the free cash flow method, they offer a 97% discount, just a huge discount if you look at their cash flows. Earnings per share, it continues to rise. I updated my Alibaba analysis about a month and a half ago, and it was $1 less than the current earnings per share estimates. So the earnings per share method actually shows that it's discounted by 69%. I blend the two and I put more weight in the free cash flow method, and I get to 88%. So it's a really, really strong proposition. And again, the balance sheet's really strong because they have a lot of cash on the balance sheet, far more than their debt. They could actually pay off their debt immediately, or they can pay off their debt with EBITDA in about 1.25 years. In 2023, the Alibaba stock hasn't done so well. It's down 4.6%, while Amazon is just through the roof, and a lot of tech companies are just flying high. And at the beginning of the year, it was at $120 per share, and ever since then, boy, it's really dropped. So I think it continues to be discounted. I've been nibbling and buying shares of Alibaba, but it really does provide a nice discount between where I think the company is valued at $164 per share and where it's currently trading. Now comes the big question. Should I put more of my hard-earned money into Alibaba stock? Should I just hold my shares, or should I sell these shares? Let's take a look. I go through 4 questions. The first one being, do I want to be a part owner in the Alibaba business? Do I want to be part of the industry? The answer is yes. I think it's a very good business, very lucrative. And I like having a company in China. The company is operated very well. It's a very profitable company, great free cash flow generation. So I have to give them a check mark there. As mentioned, they have a lot more cash than they do debt, and they can pay off their debt with EBITDA in 1.25 years. So the balance sheet's just in very good health and a very, very big discount. So I'm going to continue to buy shares in Alibaba. I always, measure, and I'm careful with how many shares I own of Alibaba, and we'll continue to buy shares of Alibaba. So that's my video on Alibaba. And I began by asking if it was dead money to put, an investment into Alibaba, or is it going to be a really big payoff for investors? And, I believe it's going to be a payoff. That's why I'm going to buy more shares, but I'm going to be careful. I'm not going to buy too many shares. It has been a stock that has surprised to the downside consistently for the last couple of years. So that's my video on Alibaba. Thank you for watching. Do me a favor and like the video and subscribe to my channel. Also, I'd love to hear your comments on Alibaba. Would love to see what you're doing with the stock. If you like the company, dislike the company, any comment was welcome. With that, good luck investing in 2023.